Oh, right. So I was just about hitting bed. It's 5:17 a.m. But I just had to do this so that I don't lose the spark when I wake up. All right. So this is gold, and I have a shot here. I already talked about it yesterday morning, how I have a long-term bias on gold, and I think I can show that from here. From that order block here, I was selling and I kind of like have an outlook up into that daily fair value gap here, right? So this is what we have. So as you can see, I'm just following that directive. I talked about how I wouldn't like to be buying when prices are premium, so I'm in sales. So I have one position as kind of like the grand offer, but because I'm a short-term trader, I'm a short-term trader. I would take stabs as I find due since I already know that directional bias. The moment you have directional bias on your pad, then all I need to do is just apply my three-way framework, which I've taught here also, right? And it's exactly what I wanted to do. But I want to show you something that was happening because just before I took, you know, the trade here, which you can see is done, I took a loss first, right? And I wanted to just really explain that time is the most important thing when you think about price. It is time and price, not price and time. And the reason is time is what can be constant. Time is what is known. Time is what the outcome is understood. We know that price is going to open at 12 midnight and then going to close, for the day at 19:45, then start the next day Asia session. It's stated like that doesn't change, right? And if you then use that to look towards the algorithm and look for your ideas, you start to see patterns that reoccur, right? Even on the institutional levels, this is the reason I believe that there's an algorithm. There is a time factor to how orders are being processed, right? If you think about DTTC and how the algorithms actually or how central banks actually process orders, like those things actually have a time bound, right? It's probably a 2-day period before transactions are done, right? There is the 8:30 time, 8:30 a.m., as we know, also as a time specifically that institutions actually put in orders, right? And yeah, what I'm trying to say is understanding what ICT will call macro, or understanding, specific times where you want to see ideas play out is key to your trading, right? So for Asia session, I talk about it a lot. I want to be thinking about 2 a.m., right? 2 a.m. is 2100, um, 2100 in my time. And for some reasons, as soon as price took out this high, I also wanted to take the trade, right? We started Asia session, but that run was 20 o'clock, right? That's 1 hour before the time I should be looking at, Asia session, right? So as soon as I saw that runnable buy side liquidity, it fits my model, right? And this is exactly what I want to say. The moment you lose one part of the system, then it's no longer the complete system, right? And this is it, right? So it takes out buy side liquidity, right? It takes out previous day's high, right? So I moved into the lower time frames, right? And then I just took a trade, right? I took a trade. I think I moved into the 1 minute. Right. Yes, I moved into the 1 minute, and this was what I did. I sold here. I sold here. All right, and I was expecting sell side liquidity. And yeah, as you can see, price took me out, right above that high there. That's the trade was somewhere inside of there. Price took me out there. Right. And yes, I was able to get in, and it's because I kind of like had conviction on the directional bias I wanted to see. So I was really, really keen to see what price was going to do. Are we going to really take out last week's high? Because taking out last week's high kind of invalidates the whole idea, even the long-term trade that I'm on. right? So I was looking at, oh, I've been really bullish on gold. I wanted to see that. So I just kept spying on it as I was reading my book, right? And look at what happens at 2 a.m. That's what I want to show you. At 2 a.m., we have another high that takes out the high of 1 a.m. So nothing was wrong with the bias except time. And that's it. That's all I just wanted to communicate with you. And I know this, right? But just like you know your rules, over trading, over leveraging, and you still want to just do something outside of it because you just feel like you can, escape. And maybe sometimes you escape and it pays you. But the truth is, if you keep doing that, you train yourself to be able to play away or against your rules, and it beats you in the ass, just like it did here, right? I was able to, recover that loss and actually make more. But I just wanted to share that as it's important, right? Time is so important. At the right time, the right things happen, right? At the wrong time, right? Expect the worst, right? It might still work out, right? But things like this happen, right? I wanted to see a sweep lower and took my stops out first and then still delivered the same thing, right? But I've been doing this for a long time, so I was able to just find an entry somewhere here. Immediately, I saw the close right below this low. I was entering through that next candle. I didn't wait for a retracement into any fair value gap OB. In fact, if I did, I would have gotten the play. Right, we were already bearish, and even if that was going to happen, I made my stops. Um, accommodating for that, right? And now we're seeing that I've been able to take good enough partials, 80, 90% away from it. And the actual trade, which is the main offer, is back into profit. So that's good. We're going to watch how it is. I plan to share, all of the trades I take. If all of this works out, it's going to be a really, really good lesson. You're going to learn exactly how to engage price without hesitating and with confidence and with conviction. All right, guys, I'll catch you in the next one. Bless up.